doctor themselves, they don't know how to use the technology. So unfortunately, a lot of people had bad experiences with telehealth, and it didn't tick all the boxes for them, and it didn't do everything that it was supposed to do, hence it didn't work. So a lot of that bad taste in the mouth, you need to try and counteract with good experiences. Also, evidence from international sort of studies and discussions around the success of telemedicine and how much better it worked internationally in comparison with what worked here. But I think also a lot of it is around communication. And unfortunately, people don't open emails from their employers. People don't open emails from their insurance company. You just cannot reach people. So finding the right way of communicating with people, you know, with one organization, what we did, because a lot of the employees in that organization were also not very educated. So not everyone had an email account, not everyone was checking their email account. And we created, for example, a WhatsApp video, maybe in Hindi or in Urdu, of few employees of that organization saying, you know, I called at work, they delivered my medicine, it was great. And that little WhatsApp video going viral between these guys on their WhatsApp groups, you know. So you need to try and reach people in a way that actually delivers the message. And the biggest failure I see in what you just said is delivering the message appropriately to people and reaching the target audience in a way that is easy for them to actually sort of listen to and accept and change behavior, because behavior change is at the end of the day the most difficult. And the moment this goes away, people go back to the doctor, you know. But having positive experiences around this being a time-saving, money-saving, I think obviously helped convert some people, but we're still a long way from that. And I think that the secret here is proper communication and continuous communication. But it is getting better and better. It is improving, but not as much as we would have liked. I agree.
Thank you very much, Dr. Haider. With this fascinating, I believe your...
We have two quick questions.
Okay.
Yes?
Okay.
It seems also as a result of COVID that mental illnesses and mental well-being or lack of well-being, anxiety, addiction is on a sharp increase. Has your organization or does your organization attend to these? How are you dealing with that? Is that something that, again, sustainable? I'd be grateful.
Yeah, I mean, obviously, and again, internationally and everywhere, the incidences of sort of mental health related transactions have increased. There is a much higher demand on psychologists and psychiatrists, that's a fact. Psychology and psychiatry is a very good use of telehealth. We have embedded that in certain situations, and we're setting up a center of excellence in mental health, actually, looking both at psychiatry, psychology, and all that whole continuum of care related to mental well-being. But this is definitely an area that had benefited heavily from telemedicine, and telemedicine for a long time was the only option available for mental health patients. So absolutely fully agree with that.
Yeah, live cases also come sometime, you know, from the labor camps, and which is after COVID. And I've been reading also sometimes on the newspapers that, you know, very often just 2 days back also, I was just seeing that one of the employee just hanged himself, even, you know, because he was suffering from COVID, and third time that he was hit with COVID.
Yeah.
You know, so...
COVID had been detrimental for mental well-being, and obviously telehealth was one way to deal with that. And we had certain camps where we had a dedicated counselor that was just always online with that camp. It was a large camp, few thousand employees, just one dedicated counselor, just dedicated for that camp because of this. And we had cases where, you know, sort of people who actually thought they were COVID, and especially in the beginning when the world didn't know enough about it, you know, was a gentleman who tried to commit suicide just because he was a close contact, and he said, oh my God, I have COVID now, life is over, even before getting the diagnosis, you know, so it is really damaging, and this can be quite serious, so yeah, very fair comment.
Dr. Zahra.
Doctor, yeah.
Dr. Haider, I think you are aware the medical cost escalating, I think, year by year. And for insurance companies, they are suffering from, say, competition, that's something else, but the way of, say, abuse as well as over-treatment and the inflation. We are not going here to talk about abuse as well as over-treatment to escalate the cost. But here the question, always question mark between actuaries, between head of medical, what's the inflation rate in this country, and sometimes very much confusing in a way of medicine prices or providers increase prices or this and that. Can you give us some input on this, please?
So if you look at, again, international literature, always healthcare inflation is higher than standard inflation. So there is always at least few percentage points higher in healthcare inflation in comparison with standard.
Can you give just little data, like, last 3-4 years? What
I
has
mean,
been?
obviously the whole COVID impact and sort of how it drove things up and down has been fairly inconsistent. So I think there is a lot less viable numbers for me to be able to speak to. But let's say before COVID, where, for example, you see standard inflation is 4%, healthcare inflation becomes 8% or 9% or 10%. So there's always few percentage points higher. And this is driven by aging populations. People are getting older, requiring more healthcare. Healthcare is more expensive. So the actual impact of age on the cost of healthcare. Technology, there are more sophisticated technology because now there is a gamma knife and this robotic surgery and all of these are expensive and someone has to pay for it. New medication, cancer drugs, hepatitis C, all of those. So there is an increase in cost of medicine and technology. All of these drivers leading to healthcare inflation being higher than the standard inflation. And that's why it's expected that year on year there will have to be some inflation in medical policies and an increase. However, if that is only due to inflation, that would be fair. The problem is, like you quite rightly said, is overutilization and huge competition in an already saturated market drives that. Because if you have a hospital and that hospital has 30% or 40% occupancy and you're paying your salaries, it's a sink or swim kind of situation for you, either live or die. So you start to then, okay, let me maybe just, guys, CT scan is not doing very well. Let's push you a little bit more on CT scan. Or MRI is not doing very well. Incentivize your doctors to do a bit more on that. Come on, blood samples. Why you're doing CBC only? Do a little bit of, urea, creatinine, electrolytes, So there is always then that pressure to overutilize because of the high the low demand and high supply, because unfortunately there has been perhaps more medical capacity created in some situations than patient needs, especially in the higher segment. You've got 30 plus hospitals in Dubai catering to 15% of the population. That's not a correct sort of formula. So there's obviously overcapacity, which is leading to abusive behavior. Again, what we try to do with that is to try and use the different technologies to reduce that, make sure that all of our practitioners are behaving responsibly. In fact, one of our GPs, she was our highest revenue generating GP and we fired her because she was constantly kind of overusing, and everyone said, come on, she's the top earning GP, but we said that's a behavior that is not acceptable for us. So
you must have given the target to her because her earning was
well,
more.
we compare with peers. We compare with peers. So if a GP is achieving X amount and she's achieving twice that amount from the same number of patients, there's something wrong. And you try and advise people, but at the end of the day, we had to take action, right? So I think coupling the responsible physician behavior with solutions around cost saving. So if you can have a digital consultation, why do you push the patient to come to the clinic? If the patient comes to the clinic, it's automatically easier to do some bloods, do an x-ray, do stuff. So a clinic visit is always more expensive from a telehealth visit, not only because the consultation charge is higher, but because the ease of use of additional diagnostics. So we actually encourage a more responsible behavior and use technology to minimize, because we don't want to benefit by making a lot of money from one patient. We actually want to benefit by getting the volume, so we can still do the same amount of services, but to a higher number of people that require these services, rather than a smaller number of people that don't need these services. So that's how we've built our model.
But still, I believe you believe on the malpractice insurance, which you must have bought it from us.
Yeah.
Okay, very good. With this note, I believe we are running short of time, and thank you very much this was an eye-opener, definitely for me as well, and for many of my audience, because you have seen both sides of the coin, as we say, from the regulator.
I'm still on your side.
Yeah, okay. Thank you very much, Dr. Haider, and then we look forward to see you again and to hear you again, and we definitely looking forward to cooperate with your Al Futtaim Health Hub, and all my practitioners are here. They heard you very
It will be
well.
our pleasure.
Thank you.
Thank you. Thank you very much.
Thank you, Dr. Haider, for a fascinating and genuinely eye-opening presentation. We're going to move along to a gentleman who's probably one of the busiest people I've ever seen in the insurance industry. Certainly, he seems to be at every event I come to. He's a great speaker. So I'd like to welcome to the stage Vasilis Katsipis. He's the General Manager for Market Development for AM Best for MENA and South and Central Asia. He's been with AM Best for the last 12 years, having joined the company in London as a managing senior financial analyst, and ultimately moved to General Manager of Analytics for EMEA region. Prior to joining AM Best, Vasilis was responsible for alternative distribution channels at GE Insurance Solutions. Please put your hands together to welcome Vasilis to the stage. Thank you.
Thank you to the organizers for inviting me and to Peter for the very nice introduction. What he didn't say is that I'm making a good point of looking busy by making loads of presentations. That's the trick. So I'm going to talk a little bit about natural catastrophes, which on the face of it doesn't have much to do with Insuretek, but hopefully we'll see a little bit of a different picture. So without further ado, and jumping over the disclaimer, what we have here, and in order to set the scene, we have the development of losses out of natural catastrophes on a global scale. That's something that we take from Swiss Re. And I think what is interesting is that last year was the fourth largest in terms of losses in the history of, in the recorded history. And the reason I think it is quite interesting is because we didn't have many of these mega events. We are seeing in recent years the emergence of the importance of the secondary events that maybe would not be global news, but they are significant to create huge losses for the insurance industry. And that's the year that we did have last year, but also something that has been developing in the recent 5 years globally. If we were to look a little bit closer to what happens in our region, we are looking at, this is a map that has been developed for the United Nations. It shows the World Risk Report. This is a report that is done on most countries around the world by an independent study by a university in order to identify on one hand, the risk that the countries have, and on the other hand, how vulnerable and how capable they are to deal with these risks. So obviously the darker the red color or orange, whatever it shows, that is a country that has both a high risk and a low capability of dealing with it, whereas a dark green is on the opposite side of the spectrum. So if you see into the GCC, you can see that it is relatively green. And if we go one step further, this is a list of the data that are used to populate this map. You may be able to see that actually the whole of the GCC countries, the ones highlighted in red, they're on the lower part of the table. The problem is that this is a report that is being done on a regular basis, and actually all of the GCC countries have seen, with the exception of one, they have seen an increase in both their riskiness. We have seen an increase. All of the countries, with the exception of Qatar, have moved up on the global scale. Indeed, this table is splitting the countries in quartiles, and for the first time in 2021, we've seen one country breaking into the third quartile, and that is Kuwait, and UAE is pretty close to it as well. If we were to look a little bit further, what we do see is that we see an increase in both the susceptibility and the vulnerability scores of each country. So what that means is that the assessment, the countries and the economies are more vulnerable and more susceptible to natural catastrophes than they were 3-4 years ago. And that means that building the capabilities in order to be able to deal with these risks is becoming more critical. I think that we're already seeing the impact on the insurance market exactly because of that being accelerated, being increased. And we're also seeing around the region, I would say, the first steps from certain governments and regulators who are trying to understand how that impacts the insurance industry. It is important that we start moving into the next phase of understanding where the risks are in each country, how they are impacted, and what that is going to mean for an insured portfolio. Let me show you a little bit more. This one is the rainfall in the region for the last 100 years. If you tell me that you can see a trend, I would ask you to point it to me. It just looks like a big set of data moving up and down. However, I would point to a couple of things. We've had a lot of claims in large claims in recent years, either due to floods in the Oman, in Saudi, and a few years back also in the UAE. If you look at the yellow line, that is the line of the Oman, you will see that actually on a historical level, it's not even the highest, it's not even close to being the highest rainfall. If you look at the gray line, which is Kuwait, that's the only one that had significant rainfalls in the last 20 years on a historical level. Yet the losses have been increasing in recent years. And you can also see it here where we are looking in the last few years. You can see that everybody is bunched somewhere in the middle. Only Oman peaks, and that was Gonu. Not even last year it was as severe as Gonu was in terms of rainfall. So most of the recent floods that we've seen have been historical lows. They were not events that you would categorize as something like once in 25 years, not let alone 1 in 100. So what we are seeing here, though, when we juxtapose it with the losses that the insurance industry has been facing, is partly down to the increased insurance penetration and also increased values. What we are seeing, or to put it in another way, if you had a big flood 100 years ago, how many properties were insured at that time. What we are, therefore, if we were to have a historical event like we did have 50 years ago, that would be a much more significant event. Here we're looking at the relationship between the rainfall and the losses. And I have to say these are net losses. So they are after the impact of reinsurance. And that reflects partly, that will also reflect if someone is buying reinsurance well to protect their portfolio. If we go one step further, you will see this one is showing a little bit better the correlation between, in the last 10 years, between the rainfall and the loss ratio in this region. And actually you can see that in both Saudi Arabia and in Qatar, the correlation is the strongest. Previously, Qatar was also quite significant when we had, the correlation was quite significant when we had Gonu. Clearly, there has been a difference in reinsurance buying since then, but also we didn't have the very peak event in terms of rainfall that we had before. So what we are seeing is we see part of the markets in the GCC, actually the claims ratio to a great extent showing correlation with the natural events and mainly the rainfall. In other parts, not. Here we see the result of a what-if event. And the what-if event is, what if we had an event like Gonu that was to cover the whole of the GCC region? Yeah? What we saw, so what we are having here is the results of 105 companies that we follow in the region. And we are looking at it based on the results of 2019. So the first column shows you what was the situation at the end of 2019. 82 of the 105 companies were profitable, 23 were unprofitable. What would happen if we had a major flood, as we did have in Gonu, but covering all of the GCC countries? That would result in 83 of the companies suddenly becoming unprofitable. And of these 83, the 32 will actually see a decline in their capital, so large that they will need to beef it up to inject capital in order to meet their minimum capital requirement. Yeah? So, an extra 60 companies will lose money. Of these 60 companies, something like 50 plus will see a decline in their capitalization. And of these, 30 will need to inject capital. How much capital? Between 650 and 800 million US dollars for the whole of the industry. Now, I reckon this is quite significant for the state of the market to have to inject capital, especially as some of these companies already were not very profitable. The interesting also point here is that this is an assumption that all the money are paid by the reinsurers. Yeah, we do not assume any default by reinsurers. We do not assume major delays in paying. And that is significant because, as we all know, this is a market that depends heavily on reinsurance protection. On the good news, and that is again looking at the global stage, global reinsurance capacity has remained stable, and I would say in the last 3 years, it has been quite high compared with previous years. So in that respect, from a global perspective, and considering that even with everything that I've said, these markets are considered less catastrophe prone than others in the world, that is good news. And it is very good news when you consider exactly this picture. Here we have, first of all, the utilization of reinsurance, and that is the blue line. We see what is the cession ratio in the region. And while in 2010 and up to 2014, that was below 50%, it has continued increasing in the last 9 years. And now it stands to almost 65% cession ratio. Some would say that is pretty high. At the same time, the cost of reinsurance has been declining. We estimate it based on the portfolios that we see for the whole companies, has been declining up until 2017, and in line with global trends, it started climbing up. Now, as you can see, the markets have benefited from relatively cheap reinsurance, which is actually, as I said, a result of the fact that though cat exposed to a certain extent, it's not as cat exposed as Japan in earthquake, for example, or floods in the Gulf. The question that I think we need to ask ourselves, because the viability, the medium term at least viability of the industry depends on it, is if the counterparty risk has remained the same. In other words, have reinsurers continued, or the reinsurers that are being used, have they continued to be the same high class that they were in previous years? And also, is reinsurance linked to the risk appetite of the companies? And to another extent, how do you define risk appetite and your exposures in a market that has so little ability to identify some of the key exposures to cat events? So concluding, yes, we do see low levels of nat cat exposure in the region. However, the impact of the exposure on the profitability of the insurance companies is increasing, and reinsurance is not going to be the only solution. Both the market and regulators will need to start thinking about their ability to understand the risks on an aggregate basis a little bit better than was necessary up until now. And I think we are moving into a new phase in the market in terms of that. And of course, all that needs to be done in the frame of insurers and reinsurers in the region, better understanding their risk appetite and building it into their ERM practices. So with that, I would be open to your questions. Yes, Dr. Ali.
Not working, yes. Vasilis, I have 3 questions. The first one on the global, what happened, natural catastrophes, which always strike my mind as I'm puzzled to understand. Globally, when you say there is a loss of that year, 100 billion on catastrophes, the insured risks, it's only 40 or 50%. Well, I heard Munich Re declared, they said 200 billion last year, it's only 120 insured risk. This is the global, and mainly when I'm talking about here, it's most sophisticated market, say America and Europe. Can you just give us why this big gap uninsured with those countries? That first question. Can I take the second one?
You can.
Yeah.
I'll take
The
notes.
second one, going to the GCC, when you mentioned here some claims happening, capital required, do you have any idea what is the percentage of risk insured? Because if the awareness in this part of the world is so low, what is the percentage of risk insured or what is non-risk insured, which is, we consider it is economic loss. And last one, on the reinsurance side, I agree with you now. You said the required reinsurance is much higher, maybe going up in this. I don't want to go to the details of sometimes high sum insured, fire is different than motor, this and that. But I am having now, in the last 2 years, a trend which make the demand on the reinsurance much higher than what we anticipate or we expect. And that trend, reinsurance, they're asking for converting their treaties to quota share. For example, motor, now they push you. You have to go for a quota share. In the past was excessive loss. Means I'm not ceding in the past that much of premium, but now I'm forced to go and cede more premium. Same thing maybe medical. And then surprising also, fire and other lines, they insisted for a quota share, but they ask you with low retention. That was really shocked me. Why with low retention in the past you ask converting proportional to non-proportional and increase your retention? I mean, the philosophy of reinsurance is in a trend of change. I need your input, please.
Okay, let's start one by one. You talked about the big gap, and you highlighted that this is actually driven by the developed economies. And yeah, absolutely. I mean, that's where, we had a lot of the claims, and also that's where you have the big values. And I think there are two things. One is that you still have some pure underinsurance in the developed countries. So not everybody is insured for whatever reason. And the other thing is, and probably it is personal reason, I don't know. The other thing is that we have, often we have underinsured in terms of the value. So people may have insured their property, but to a much lesser value than it is the real value. And I think that these are the two reasons that can be driving that. But even when I saw the statistics, they are quite high. It is, I believe, an indication that probably it's not as highly protected a market. They are not as highly protected markets as we would have thought. We also had, in recent years, a lot of losses that actually came into areas where maybe people do not associate with the high likelihood of losing their property. So, we always used to think of Florida as being susceptible to the hurricanes. But then people who are further north and slightly to the west may have thought their properties were not as susceptible. And maybe they decided not to be insured. Yeah? In terms of, you asked about what percentage of the risk insured in the GC. I don't have the statistics. I don't have the statistics, but you know, you can run some kind of assumptions and say, well, the insurance penetration here versus the developed economies and how much uninsured they are there, what range can I expect to have here? And if you play with that, I think you will end up with something like 20% insured. But it's also, look, it's also an exercise that, you know, you will have a lot of problems finding an answer, because over here we also have a lot of property which is very high value, and I think it's all insured. Yeah. As far as the reinsurers moving from excess of loss to quota share, you know, reinsurers are, and I used to be one of them, are a little bit like bankers. There is the famous statement that bankers want to lend you money when you don't need it and don't want to know you when you need the money. So reinsurers would love to have your profitable business on a quota share and would love you to reinsure on an excess of loss with very high access points when they don't like the results, yeah? I think that's what you're seeing here. And yeah, I mean, moving from excess of loss to a quota share with, you know, did you say with no retention or very low retention? Yeah, the end result may or may not be the same. But, you know, in a big event, you may have the same protection, but as you know, you will be taking the pain from the small events as well. So I think it has to do with reinsurers, as always, and as every company, are trying to maximize their profitability. Yeah?
Vasilis, may I add one thing? Yes, they are looking for profitable business, but if I look at the two classes of insurance, medical and motor, they are not making money in general. I'm not saying in it.
I agree.
And may I say maybe they push for this quota share because they want their top line to improve and having higher, say, top line rather than bottom line?
Look, if they do the same for all companies, then yes, that's a case of wanting to have top line, and I can see an argument for that, because most of them are based in regimes where diversification of income streams will play well. Yeah. So that could be one, but on the other hand, you know, you keep on telling me how profitable these two portfolios are for you. So maybe it is specific to you and certain companies like you. You know, the market is made of good and bad portfolios. And if they are offering to you and similar companies like you to take your motor and medical on a quota share, it's because they see profitability. If it is a market-wide, and I don't know, that's the honest answer, but if it is a market-wide, then I don't think reinsurers are after top-line volume in this environment. I think they are more after other. Profitability is high at the present moment, I think globally, and capital efficiency is another one. Yeah? Okay. I think that's it. Thank you very much.
Thanks, Vasilis. I definitely have missed those graphs during the COVID period when we haven't had conferences. I'd like to invite our final speaker of the morning before we go to the break. Vivek Mandra, a partner at AJMS Global. Vivek's been a trusted advisor with over 12 years' experience in strategy consulting, sustainability, corporate finance, financial business transformation and program management across a wide range of sectors, including the public sector, financial services, oil and gas, and family groups within the Middle East, the USA, Asia, and Europe. He's worked with clients like Infosys, PwC, KPMG, and the RTA here in Dubai. He's advised multiple insurance clients on their long-term growth strategy and product diversification. Vivek, the stage is yours.
Thank you, Peter. Thank you for that introduction. Good afternoon, everyone. I know it's very late and everyone is almost waiting for the lunch, but probably something which is a topic which is very close to my heart. Strategy, and I'm mixing that with sustainability. Not sure whether that relates with Insuretek, but we'll probably see how we can link it. Yes, probably as mentioned just 2 sessions back, there are mounting pressures on the insurance companies, right? There's a lot many issues which is currently going on. Obviously, starting from the competition, market is growing at less than 10%, right? And with more than 30 companies vying for the same set of customers, yes, it's very difficult to gauge that customer. And which eventually comes to the profitability. Obviously, companies are looking at their solvency ratio, and with regulators coming in with a lot of regulatory requirements, it's difficult to sustain in this market. Plus, on top of that, talent acquisition. How do you acquire and then retain that talent when there's this limited market? And finally, this whole evolving customer preference. Every customer is looking for new things. So yes, there's a lot of pressure which the insurance companies are facing. So how do you deal with it? So the trends which we see in the market is very clear, right? First and foremost, digital transformation. Something which is not new, but yes, post-COVID, it has probably been preponed by more than 10 years. We saw Dr. Nath saying about how the Alpha Time Health is looking into it. So yes, things are moving from the technology perspective. The new kind of an offerings called prosumer offerings, right? A customer who is not just looking into an offer, but wants to be part of that product, right? Product plus customer, where he wants to devise his own policy based on his own requirements. Merger and acquisitions, obviously, we have seen GIG acquiring AXA in the region, and then finally the partnership with the Insuretek companies. So as it goes, if you can't compete, join hands. So if we are not able to transform, we are joining hands with the new Insuretech companies, because the agile they are, probably age-old insurance companies cannot be. But then there is one trend which is definitely being seen in the region, in the insurance companies, and everyone is talking, which is sustainability. So it's not just something which the companies are thinking as a new, but there's something which has been pressure from top as well. To be precise, the 3 main stakeholders. The reinsurance companies, they are looking into what are the new products which you are offering, which is leading to sustainability products. The credit rating agencies, dear friend just talked about AM Best. They are talking about what to do, how you are calculating the sustainable practice and looking into their rating. And finally, obviously, the regulators, with Central Bank and ISCA coming up with clear guidelines on sustainability. How is that the insurance companies are dealing with it? So in a nutshell, the S in insurance is moving more from a strategy to focus more on sustainability. And that clear trend can be seen in the region. When we speak to insurance companies, everyone is talking, how do we approach the whole thing? This is not something new, to be precise, right? ESG has been there since ages, but why is it suddenly over the past few years it has gained an exponential growth? The whole environmental aspect, looking how you are collaborating with the environment, how you are addressing all the environmental needs. The social, what are you doing for your community, how you are inculcating the society within the organization and ensuring the products are being dealt for that. And finally, the governance, which has always been there from a corporate governance perspective, but it talks more into the gender diversity, the overall ethical practices within the organization. So, yes, there are pressures which is coming on insurers. Stock exchange, as I said, ESCA has made it mandatory for ESG reporting, which has now moved to an integrated reporting. And then reinsurer are promoting more because they themselves are aligned with overall ESG principles. So as an insurance company, how do we deal with it? How do we go about, and how do you inculcate the whole sustainable practice within the organization? To be precise, embedding the overall ESG in your overall strategy, which not just give you a competitive edge over your competitors, but also give you an extra push within this closed market, right? It gives you a reputation, obviously being the first mover and attaining that sustainability within the organization. It manages you to identify the risk and then mitigate that well in advance. It opens up new opportunities, new customers, especially the new millennial and the Gen Z, are looking for something which is revised to them and adhere to the sustainability principles. And finally, the cultural and intrinsic value within the organization, which helps you to retain that talent, which we saw that was one of the major issues. What could be the starting point for this? Probably there's already GRI principles set and look at it. But then first could be the principle of sustainable insurance. They have clearly highlighted 4 key guiding principles, which is based on major pillars like the organization itself, then your partners, which is client, customers, your partners, the regulators, and finally the disclosure which you are doing to those regulators. And if all these principles are being aligned, that could be the starting point to start off with your sustainable agenda. Globally, insurance companies have already inculcated that, right? I mean, most of the names which we see have already aligned themselves with the PSI, with the net zero principles. They are coming with the products which is very specific for sustainability. For example, we have seen in the region as well, insurance companies coming with a better rate for electric vehicles or electric buses, right? So you need to inculcate that how you not just devise sustainability within your organization, but also in product per se, so that you can get those customers which is looking into it. What's the whole process, right? How do you identify what is important for you and go through the whole journey? To be precise, it's a simple 4-step process. To start off with assessment, you look at the organization, how you can inculcate the ESG principles, what is important for you, which is, as sustainability talks about, materiality. What is material for your organization? You align with your stakeholders, your partners, and come to that these are the things which we want to take forward. Then comes the designing phase, where you have designed the overall ESG framework, aligned your all goals to it. Then develop the overall policy, as well as identify these are the initiatives which needs to be partake over the next 1 year or 2 year, the time frame which you have given yourself, and finally the reporting, which needs to be done, a mandatory part as per the ESCA and the regulator. So what we have done, to be precise, at AGM is, we call this as an M-Cube or an M3 technology, where we have created a tool, tailor-made sophisticated tool for insurance companies, completely tech-oriented, which looks into the material aspects of your organization, take into consideration all these stakeholders, then support you to measure all the KPIs and initiatives which is required, and finally monitor and report it based on your requirements to the regulator. So in a nutshell, yes, sustainability is something which is now being discussed at not just operational level, but more at board level. Everyone needs to think now is how do we differentiate ourselves from the competitors, and probably being sustainable, aligning yourself with those principles could be the edge over others. Thank you. Happy to take any questions.
question and, or maybe a comment.
Sure.
Looking at ESG, environmental, sustainability,
Social and
governance.
governance.
Governance has always been something that is a prerequisite under any name, proper management, accountability, etc. So let's put that on the side. Sustainability in a capitalist environment, sustainability means survivability. So that's always also been there. I think maybe the new component now that people care for is the environmental. Let's look at that for a moment. Isn't it ironic that those people who are pushing for focus on environmental are also nations whose natural resources for hydrocarbons have either depleted or are on the verge of depletion? Europe, as an example, the North Sea, the UK, to a lesser extent the US, but only after shale oil was discovered and fracking to recover hydrocarbons which were previously difficult to recover. I see an irony there. Now, we live in a part of the world where hydrocarbons are important, and all the focus is on carbon and carbon emission. So I think it's important that the governance and sustainability are a huge focus. Environmental issues, yes, are important. Carbon emissions, global warming, yes, is a feature. But I also see that there's a degree of political incentives for people to be pushing on that at a convenient time. What are your views on that?
Thank you for that. I probably partially agree or disagree with that comment. Yes, there is some political agenda behind this, but probably we need to look at the bigger picture, right? The whole way the globe is moving, right? The world is moving with this COVID last year. Everyone has thought about, right, how do you actually move more towards a better environment, right? Especially the millennials and the Gen Z are really looking into it. The statistics are there. Simple thing, people are moving more towards public transport rather than using their own cars, right? The whole evolvement of the electric vehicles is one of the major things. They're pushed towards the electric bus, not just from the government, but also from the public, can be seen. So yes, even as a customers, as a end consumer, people are really looking into it. Is that how do I save the environment? How do I promote more towards it? And what is my role towards the whole environment? Yes, SNG is something which has always been there. It's just people are more aware now about those aspects. But environment, yes, could be a push from that. But then there's an inherent push from internal as well, from the customers. And that's where probably the companies needs to look into as well.
Okay, I accept that, but I also want to counter.
Sure.
So electric vehicles. Everyone is talking about how this is more environmentally friendly. I put it to you that it is more environmentally friendly in the short term. But what are you going to do with all those depleted batteries? What are you going to do with all those harmful chemicals that go into the making of those batteries? Have we thought about that?
So yes, there is an exit plan for that as well. The companies have already started to be precise on looking into what to be done with the depleted batteries and those chemicals. So yeah, in a nutshell, it's already there as a plan as well to what to do with those.
And electromagnetic effects on cellular and biological structures, that's also not been, it used to be very much in vogue talking about the risks from cellular phones and electromagnetic fields. That also seems to have taken a bit of a backseat. All I'm saying, and what I'm putting it to you is, we live in a part of the world where hydrocarbons are important. Of course, coal is one thing, and gas is something completely different. The unit of utility that you derive from gas is completely different from coal.
Absolutely.
So with that in mind, my money is on carbon capturing rather than carbon elimination.
So that's carbon...
And electric, yes, I welcome technology, but you also mentioned the millennials. Millennials are very much influenced by what the social media pump out, right? That's how we form opinions and shape it. And obviously, with those political agendas in place, I will put it to you that there's an element of that. So my money is focusing on governance, sustainability, environmental, yes, but let's also be mindful and think a little bit outside of the box, because electric and lithium and those chemicals that are associated with that, electromagnetic fields that go along with the vehicles that are using that, and then the end result, what do? We recycle, we can't recycle, all these issues. I think we should be a bit wiser, certainly in this part of the world, in looking at the E aspect of it.
True, absolutely. It needs to be looked at a complete holistic view. I agree with that. And yeah, we can proceed it. Thank you. Any further questions? Thank you very much.
Thank you, Mr. Vivek. That was an intriguing presentation. With that, we have come to the end of this exciting session. It's now time for a short networking break. I request all our guests to kindly move toward. Okay. All right. So, okay, perfect. So moving on, we'll have the panel discussion right away. We'll just wait for the setup to be done. All right, ladies and gentlemen, we have the panel discussion for the topic UAE Insurance Association. As a moderator, I would like to welcome back Mr. Peter Hodgins, partner, Clyde & Co. A round of applause, please, ladies and gentlemen. Let's welcome our first panelist, Dr. Abdul Zahra A. Ali. He's the chairman of Insurance Business Group. A round of applause, please, ladies and gentlemen. So I request you to kindly join us on stage. Our next panelist, Mr. George Kaban, chairman of DIFC Insurance Association. A round of applause, please. And finally, on behalf of His Excellency Fareed Lutfi from Emirates Insurance Association, we have Mr. Aftab Hassan joining us. Mr. Peter, I request you to kindly take over, sir.
Sure, no problem. Thank you very much. Happy to be back again. Sorry, we'll just get the furniture right. Gentlemen, we're going to discuss during this session basically the roles of the industry associations that we have here in the UAE. I think for the benefit of the audience, it might be worth just starting out with your respective organisations, just a short description of what you are, what your remit is in each of the organisations, what the areas are that you are focused on as a role. Just to introduce each organisation, please.
Now we can say good afternoon, ladies and gentlemen. I am the chairman of IBG Insurance Business Group, under the umbrella of Dubai Chamber. The IBG established in 2004. Since that time now it is 17 years. There are constitution and running IBG members to run through the constitution, and this constitution saying that 13 members, and those 13 members, 5 represent national insurance companies, 2 represent foreign insurance companies, 5 brokers, and 1 loss adjuster. The goals of IBG since establishment till now, it's many goals, which is one of them increase the awareness of insurance within the insurance industry. Another one is engage in training. Training is supposed to be focusing on the national UAE or general training for the industry. And another things that we have to look at the regulations, compliance, all those goals which is set by the Constitution, we try to cover, we try to execute over the period of this. And the activities, maybe later, there is another thing I can add. Activities of the IBG, it's ranging from tackling issues, problems within the market, many events. I can say since established, every year we do 2, 3, 4 events, all of them hot topics, all of them related to the industry, all of them related to the, say, regulation, all of them related to the problem that the market facing. If a new law is coming, broker laws, medical compulsory law, financial laws by insurance authority, all this really being handled with the events and with top-notch speakers from the market, and in order just to put the IBG in a position that they have goals and they have to deliver and they have to say perform according to the members' expectation, according to maybe the Chamber of Commerce expectation. We quite active over this period, I can say. I am in the IBG from the start, from the first day, and used to be another chairman, and I am now the chairman for 9 years. And every 2 years is going to be a new term for members, as well as the general secretary and the chairman. This is just a brief. Maybe there is something I can add later on when moving to my colleague George to talk about his institution.
Thank you, Dr. Abdulzahra. I think I'm privileged to have been associated actually at one point with all 3 organizations and to have been a member of the board of all 3 organizations. And that's an indication of my passion for the industry and for my desire to make the industry a better place. There's a personal motivation behind that. My personal motivation is that I come from a family where my late father was, in fact, the first insurance broker in the Middle East. And back then, an insurance broker, or the term broker, was synonymous with a middleman who just takes a bit on the side. The expression in Arabic that they used was samsar, which actually is a derogatory term. So it's born out of this feeling like certainly the profession that I have chosen, broking, insurance and reinsurance broking, I took it upon myself, to raise the standards of this industry so that brokers are no longer referred to as samsar, and I'm glad that now that term has almost disappeared from the diction of Arabic media, and now the term wasit, intermediary, which is far more respectable. That said, there's a lot further to go. So out of that was my passion to serve at any opportunity, and we do that, incidentally, for no personal gain. We are not remunerated for the roles that we take on. We do that out of a sense of personal obligation, moral, ethical, to serve and to give back to our community. So that's a little bit about why I chose to be involved in all three organizations. So I'm proud to say that I'm also a board director of the IBG. I was at one point also a board member of the Emirates Insurance Association, but unfortunately they did not welcome some of the views that I had, and I was asked to step down, which I did. I think that says a little bit about perhaps how outspoken I may have been in that respect.
Surely not.
Now coming to the DIFC Insurance Association, as you know, reinsurance and reinsurers both compete and cooperate. They compete because it's a competitive industry, but they also need to cooperate because, as you know, reinsurance is often about a subscription market where reinsurers take shares of a risk. In order for a subscription market to be effective, you need to have that degree of collaboration. So trying to set standards, benchmarking, raising standards, having a consensus, building a more cohesive and efficient market, building capacity within a trading environment are critical for reinsurance to thrive in a hub, which is what the DIFC has aspired to be, and in fact has been, for the region. So from a purely reinsurance point of view, the DRC Association, which is made up of both members and associate members, and our membership and associate members include reinsurers, brokers, and associate members such as law firms. And your law firm was very much involved in the drafting of the constitution of our association. For that, we will always be grateful to Clyde & Co. So we have tried to be more encompassing in both our membership and our associate membership to serve a wider spectrum of stakeholders. Just as an example of one of the things that our association has been advocating for, you will recall that in 2018 in the UAE, VAT was introduced, and unfortunately VAT on insurance and reinsurance was also mandated. The aspect of applying VAT on insurance policies applies elsewhere. It's not only in the UAE, and I would argue that maybe this was a proper thing to do in the circumstances. However, applying of VAT on reinsurance, where the transacting parties are both two businesses, so it's B2B, and therefore ultimately there is actually zero net revenue to the authorities, to the VAT authority, but a lot of paperwork, a lot of red tape, and it affects the cash flow. But the most dangerous aspect of that is that it has actually proven to be a disincentive for local insurers to place their risks with locally based reinsurers. In fact, it gives a certain advantage to foreign reinsurers to be the recipients of insurance contracts emanating from the UAE. So in this instance, the VAT applied on reinsurance, we've shot ourselves in the foot. We've made the UAE or GCC countries who are applying VAT on reinsurance, we're shooting ourselves in the foot. We've been advocating that authorities maybe should look at this again in order to enhance. That, along with things such as contract certainty, standardized terms of business agreements, which of course also include a significant element of ethical practices, and helping define roles, and really to try and remedy some of the weaknesses that we see in the market as a whole. In a very broad way, this is how I would describe the role and the function of the IFC Insurance Association.
Thanks, George. And I guess if we move to AFTAB, just to round this out with the Emirates Insurance Association and their role in the industry.
First of all, I'm filling the gap on behalf of Fareed, so surrogating him. He would have been the right person as the Secretary General of the Emirates Insurance Association to advocate his views about Emirates Insurance. But then, being the member, and I've been watching since ever, I'll give a little bit about Emirates Insurance Association. As you know, that this came in existence in 1988 with the degree, which was under the influence of, I should say, insurance authority. It will work always. And later on, the part of then with Ministry of Finance also aligned, and there was again another ruling, and then it all came under one roof. Insurance authority as well as Minister of Finance, they were reporting the Director General. So Emirates Insurance Association basically is the association and the only association for the entire UAE, which covers all the practitioners of insurance, which includes the members of the insurance companies and the reinsurance company local, and the brokers and loss adjusters, or the TPA primarily. So this is further, I can say that yes, as in any association, which always happened, as George was telling, that when we were the one, wanted someone to hear our voice as well as a broker, and then we were sitting in Capital Club, I do remember, and then when we picked that George should represent, because before that, one of my colleague, Mustafa, from the general manager of Gargash, we have done that exercise. We have sent him, and then he felt the same, what George shared with you right now. Then we said maybe because Mustafa is not multilingual, and probably, and he could not make that noise, or he could not, impress upon our opinion, our views, from the broker point of view. So it will be good that George can take that seat. So he represented us, and rest is history. He was asked to step down or whatever it is. But then, as I was telling you that, any association, you cannot think of 100%. I'm also wearing a different hat, supporting IBG as the Secretary General, and I do feel that we have very meager sort of opinion, to put it, when it comes to regulation, because vis-a-vis, we try just to showcase that these are the parallel view with the best of the best countries, which they have adapted the best, governance rules and regulations. So those things we just go and highlight. But we cannot go and forcefully implement as association. So we focus ourselves where we can. And the same thing in Emirates Insurance Association as well, probably they have bigger role to play, which is the expectation of all of us, I should say. Although I'm representing them, but I will talk both sides, for example, if we talk about Emiratization, we always hear Emiratization, but it's the least number of Emiratis in our industry you will find. Unlike in banking, unlike in medical, services, unlike in, you go, but I see that least representation of Imarati it is. And I always used to think of like, there must be some jolly good reason. So somebody told me they don't take it as a white collar job. I said, what do you mean by white collar job? White collar job in the sense like they think like, banking is something sophisticated, they should be and all. Insurance, as George said in Arabic, we were treated, you said samsar? Samsar, okay? So that was not good. The evaluation of intermediary when it came after that, the mindset, and we started, I never used now broker in all my writing when I write to my client, because broker definitely, the word and that nomenclature was spoiled, probably. So probably that's the reason, and which is the insurance company is well dominated by broker. The market is dominated by brokers. And brokers have their own, I should say, interest, rather than the interest which is bigger we are talking about. So whatever we can contribute as few practitioners of insurance, which with the belief which we have that yes, we can change, we can, bring some changes in terms of bringing up, elevating up to understand like what is insurance, how we are contributing to the economy, what we can do and all. This is even the Emirates Insurance Association is doing another association.
And the irony is that today, I mean, we're lucky that Aftab, a broker, is speaking on behalf of the Emirates Insurance Association, where in fact the constitution and the makeup of the board is designed so that a broker's voice can never really affect any change, right? So the board is structured in a way where anything that might be to favor a broker that might not necessarily be in the interest of an insurer is quashed. The two associations where all constituents, all stakeholders in the industry are heard and have an opportunity to make a positive contribution are the IBG and also the DIC Insurance Association. Okay, I'm a bit biased. Today I'm wearing the hat of the chairman of the DIC Association, where in fact we have opened also the opportunity for people who are in industries that are synergistic or are supportive of the insurance industry, namely the law firms, because we also recognize that certainly from a liability point of view, the casualty segment of the industry, we'd be kidding ourselves if we didn't benefit also from the minds and the talent of our colleagues in the legal profession. But IBG is yet another organization where all stakeholders, including clients, are listened to and have an opportunity to voice through the interaction. I say this, I'm trying to be positively critical of the Emirates Insurance Association because I would dearly love for that association to be a bit more progressive and to be a bit more open-minded and less fearful of professional brokers. There's been a criticism in the industry at the Emirates Insurance Association that with 170, nearly 180 brokers, that unfortunately there's a significant number of brokers who have not acted in a way that meets the expected standards. My response to that is, I have to question who is it that licensed them. I have to ask who is the authority that actually ensures that they meet those standards. The problem is not that there are far too many brokers. That's not an issue. The issue is there are far too many brokers who do not adhere to the rules, and the enforcement needs to be looked at. There are 60 or 70 insurance companies in the market. Some would argue that's also far too many. Possibly. That's a different argument. But it's not the quantity, it's the quality. If all the insurers were performing ethically and serviced their customers and treated them fairly, as many insurers do, that we as UIB choose to trade with, then we wouldn't have that problem. But unfortunately, again, it comes down to enforcement. So part of the role of, part of our mission as associations is to try and raise standards among our constituents in order to, again, improve the image of the industry.
Well, let me ask you about the raising standards and, the role again of industry bodies. Do you see yourselves as principally looking at education of your members and at potentially lobbying the regulator to try and implement best practices? Or do you see your role as also encompassing, for example, trying to specify what is market best practice? To have industry rules that are not laws, not regulations, but are what the industry recognizes as being best practice, perhaps with a view to avoiding further regulation from the IA.
Let me tell you, because if I see the events which are coming from EIA, and those events, academic in nature, many of the time as well, is there. But the issue here it is, and that whether the mindset which George was referring right now, have we changed? If we have not changed the mindset, you keep the Bible up there, you respect, but you never read, you never practice. Just to keep up, that's what it is you are looking for. So as he said, he's positively critical. I'm consciously, I'm talking with criticizing, that my conscience will never allow if I don't see that something happening, rather than just, asking members to pay for the event. Whereas the first thing which my colleagues, both of them, sitting on the board of IBG, I said, look, we should not charge people because we are doing for a cause. And there are many companies who want to sponsor that. They have in their kitty. Okay, let them pay. But the basic objective is that more and more practitioners of insurance should attend these sessions. Rather than in EIA, whenever I see that, there is a fee, and heavy fee, to attend these events. So that's the education part, which they should listen, and of course this is recorded, so it goes there as well. That's a look into that the same way which we do as IBG. Secondly, raising a standard is one side. When you have issues short term and long term, if you don't see yourself as a catalyst to resolve that issue, you shouldn't exist, frankly. But what happens is that it seems none of the issues in black and white we have as member, I'm talking about on behalf of member, because I'm not on the board of EIA, we have written in Arabic and in English and everything. Many of the times, I haven't seen any such implementation as such with our opinion, whatever was given to them. So this is, in the end, I should also say that there are some positivity as well. Yes, it is not like always we are talking about on those. The positive side, yes, it is that we need an association to represent the voice of the community. And that is the only association available, fortunately for us, where we can put that. But then the dominance, as George said, is not from the broker side, not from the intermediary side, not from the practitioner of insurance like the loss adjusters and all those surveyors and all those legal guys, on the fraternity insurance who are serving. So these are mainly those stakeholders, the insurance companies, and they have their own interest. So when we talk something which doesn't look like more commercial, viable for them to adapt, that goes in the dustbin.
Well, On the IBG side, if we talk about bringing the standard on a situation is acceptable to the members or to the industry, we tried our level best when, say, for example, new laws coming from insurance authority to put the new regulation regarding the financials, the new financial standard to the market. When we look at that, we've seen many, say, points you need to discuss and maybe more clear to criticize. We called the insurance authority themselves, asking them first about what is that law behind, objective changes, implication, effect on the market industry, because this is an obligation for the insurance industry to adopt. And then the whole members, partly, and others coming from on the audience, attending that meeting, and this was a big engage of between the two parties in order to make it more clear and more explanation in a way of coming from insurance authority. When the law of medical compulsory from the DHA, we found, we as an insurance companies understand, but we found many of the public that they have a lot of ambiguity and many questions. What we have done, we cannot call the public, we call the biggest group in the Chamber of Commerce, which is the Indian group, and then at least this big community to understand, and it was a very successful and amazing engagement in this. And Dr. Haider was one of the people that coming and answering these questions to the audience. That's the role of IBG, trying to bring more awareness, sort out issues in a way if the market having those issues. And then in the meantime, whatever that IBG in the past doing, maybe ourselves, we think we are not doing enough or sufficient to deliver more activities and more ideas in the market. The new board of directors, they came with a lot of initiatives, in fact. It's a lot of improvement in last year and going forward this. One of them, for example, that the IBG issuing the newsletter. In newsletter, we take the hottest topics that we feel the people need to read and to understand in the industry. There are too many other things, in fact, but just I'm giving this example. We try to engage, we try to be very close to the regulator. For example, now, we need to go and have set a meeting with the central bank, the people in charge of the insurance industry. What is that related? Related to some ambiguities or some problem related to the regulations which the brokers feel or insurance companies feel to address. This kind of things, I mean, the IBG try level best to put it in the market and to enhance with this initiative, with this awareness. That's very brief, I can say.
I can also add there one thing, because we also, as IBG, I'm just adding, Dr. Zahra, that we do dialogue with other business group, like he mentioned about IBPC, which was Indian Business Profit Council and all. And I just got, while here, a request from the DHA guys, Ali Lutfi, and he mentioned that one of the group, which is also with Chamber of Commerce, they want to have a constructive dialogue together with IBG, and that's good because that group is the medical service provider group, which, so it means all those who are sitting are like Aster CEOs and, you know, the private one and the government one and all those. So there's a group, such group, which 2 years back it was registered with DEC, the Dubai Chamber of Commerce Industry. So they want to have an engagement with us so that on the insurance side. So that will open door for us because we know and we where the flaws are. You know, we talked about just now also with Dr. Haider on this side of managing the hospitals and clinics and all those, and you know, so these are things sometimes we do have.
So at the DRC Insurance Association, we have at least 1, sometimes 2 regular meetings between our constituents and the DFSA, our regulators. So this is an annual event where the regulator gets the opportunity to discuss with our members what their agenda is for the coming year, the issues that they will be looking at. There, I'm proud to say that at the DIFC, perhaps unlike other places, there's an open and constructive and regular interaction between the constituents, the regulated, and the regulator. It's a very healthy environment in that respect. Nothing comes out that is in a regulatory directive without proper consultation with all the constituents, proper listening and modification if necessary, and then implementation. Sadly, this is not the case elsewhere, where often regulations or directives appear to come out of nowhere, and when you ask, well, how did that come about? Did you do any consulting? Oh yes, we did consulting. Well, who did you consult with? Because we never heard of it. Oh no, we consulted. And of course, often that consultation happens to be with people whose responses are expected to be in line with what the directives need to be. So that's not real consultation. On the subject of education and raising standards, during COVID, the DIFC Insurance Association held no less than about 10 webinars online on phenomenal subjects that are of interest to the community. The last of which, for example, and relevant to yesterday's conference and today, is on the subject of artificial intelligence in the insurance industry, in underwriting, and the issues that are relevant to that. And that's just one example. Of course, also promoting institutions such as the CII, the Chartered Insurance Institute, that is also present in the DIFC, which is a world-renowned institution for academic excellence and support of the insurance industry. So I'm proud to say that within the DIFC Insurance Association, the representation is much broader and encompasses literally all the constituents whose voices are heard equally.
I'm going to take your point about the DFSA. I know is very much willing to be involved, very transparent through its legislative process. I also heard, that there are discussions with the central bank, with the insurance authority as it then was, to get clarification. Appreciate we don't generally get the same consultation before a regulation appears, but has that dynamic changed at all since the merger into the central bank? Has the flow of communication improved, stayed the same?
Well, the central bank came just recently, and we have seen them, they are extremely active in a way how they communicate with the market. The people used to be in the insurance authority just shifted to the central bank, which we consider maybe you can deal with the same people. But the central bank now taking the insurance industry extremely on a serious topic in a way, how to improve and how to enhance, how to implement many regulation going in through. We have heard they have hired a very qualified people. We can see they are very efficient in the way of their communication. They are coming with new requirements for the market, and then you can immediately judge on the things that this is a new things, it's not happened before. Always they heard in the market, here all of us, we talk about Sama in Saudi Arabia, and we feel here by far, is different than Sama. We need to uplift the standard to the level of this. I think the central bank taking this seriously, but to be very honest, you cannot change all this in a few months, in 1 year or 2 years. I said, give them 3 to 5 years, they will fix the market in the way that I hope to our expectation. They will.
Certainly my impression's been they've been incredibly proactive since the merger, and certainly I'm, as a lawyer, seeing more on the enforcement side now happening, so it's not just there's regulations out there, but a regulator willing to step in and say to people, why aren't you complying with this, and then take action. I'm conscious about time, so I probably should throw this open to the floor if there's any questions from the audience.
If no question, I have just one thing to add before we close the session. IBG, it's open for all the industry, brokers and insurance companies. But somebody will ask how many members now you have. We have around 70 members, which mostly from broker side. And then it is open Abu Dhabi as well as Dubai and other Emirates. The board of directors, they are volunteers. And in fact, that anyone would like to be volunteer in a way to be serving this market, which we have a duties to serve this industry. I'm not asking you to be a board directors, that I'm asking you to be a member of the IBG.
Ambassador of.
It's really worthwhile. Unfortunately, I've seen a few people sitting here in the hall. It's supposed to be full in order just to hear my message. It's really worthwhile. All of us, we should serve this market in a way of our contribution in the IBG, and this is an invitation. Please don't hesitate. If you want any, information, it's the website there. If you want to contact, this is the General Secretary AFTAP, and we have a consultant also working with the IBG serving that. His name Munish. We can put his contact, his details is there. I'm just invite you, and anyone come is most welcome.
Thank you, gentlemen.
Thank you.
Thank you very much.
Thank you for your time.
Thank you so much. And Mr. Peter, I believe you have another panel discussion. So he's the moderator. I request you to stay back, sir. Thank you. And thank you so much, gentlemen. Next up, we have a very interesting panel discussion on the rising trends of M&A in the Middle East and insurers' perspective. Through this session, our panelists will discuss on the interesting trends and opportunities which shall shape the industry in the coming year, the challenges that the industry has to face due to COVID, and how we plan to mitigate it. And as the theme goes, The panelists will also reflect on how technology is influencing the current M&A industry and what the future looks like for us. So to start the discussion, we already have our moderator in place, and I call our first panelist, Mr. Safdar Jaffer, Managing Director, Milliman. A round of applause, please. He's our first panelist. Next, I would like to invite Ms. Olivia Darlington, Head of Insurance, Middle East and Africa, Simmons and Simmons Middle East LLP. A round of applause, please. Next, I would like to invite Mr. Anand Singh, Senior Counsel, Al-Tamimi and Company. A round of applause, please. So I request you to kindly take over the dais.
Final straight, folks. So it's just lawyers and an actuary between you and lunch. So we're going to do a whistle-stop tour around the issue of M&A in the insurance sector here in the region. Just to put that in context, Clyde & Co produce a deal study every year that just looks at what is going on in the insurance sector from an M&A perspective. 2021 saw more mergers and acquisitions of insurance companies than had been the case for several years previously. It was 418 transactions compared to 407 globally the previous year. Oddly enough, we saw that the Middle East actually had a reasonable volume, unusually high, albeit not as high as 2020, where COVID seemingly didn't put anyone off buying an insurance company, but there were still 17 deals in the region. So we are seeing a fair level of activity. I guess if we start is, what do we see looking forward? Do we think that kind of level of activity is going to continue? What do we see driving that? And I'm going to start with Safdar as an actuary who's probably got more visibility about what's going on in the industry and the status of the industry than pretty much anyone I know. So over to you, Safdar.
Thank you very much, Peter. As far as the M&A trends are concerned, you are right that there has been quite a bit of activity over the last couple of years in the region. And I think the fundamentals of what is driving that is also important. When it comes to the UAE, we have got 60 odd companies and 12 billion of GWP on average. Compared to the kingdom, which has got similar GWP with 30 companies. But interestingly, if you look at the last 2 years, the amount of M&A activities in the kingdom is many folds more than what we have seen in the UAE. In the UAE, we saw two distinct deals, GIG with AXA Gulf. I think that is more strategic for AXA Gulf exiting the market in that context, and GIG being the largest capitalized entity in the region. So, the fundamentals were different to the second transaction, which was between Darul Takaful and Nur Takaful, which is consolidating the Takaful industry, low volumes, challenging environment, and issues around solvency. And if you look at the Kingdom of Saudi Arabia, you are talking of at least 5 times 2, so technically 10 companies involved at a minimum on different activities, and there are a few still in the pipeline. A lot of them driven by the regulator SAMA. So the fact that there are 30 companies, 30 plus companies with a limited market base and the requirement to consolidate, the regulators' push from behind the scene has led to significant development over the last 2 years, which we haven't seen for the last 10 years. Whereas in the UAE, the same thing is happening, but I think we need to watch the space now with CB, central bank, coming in, and I get a feel that they will be moving in the same way SAMA is, because there is a sense of realization when you look at the banking sector where the solvency is at least 130% plus over the minimum requirement. the insurance industry is lagging behind. So when you come with a macro holistic view and you look at the insurance sector not performing as well in that context as the banking, then the bankers would push the industry. And like what you just heard in the previous session, there's a lot of proactivity happening from the central bank. I expect to see a lot more in the months and years to come.
And just from the actuarial point of view, I mean, that philosophy is bigger is better, essentially. You know, regulators looking at larger insurers but fewer. You know, if you're looking at the market at the moment, do you see that fundamental weakness? You've already said you're certainly not the 130% capitalization, but how would you describe the market in terms of there being targets that are ripe for consolidation?
Yeah, so what's interesting in the UAE market is that the 60 odd companies, you have 40 companies with less than 1% market share. Whereas you have the top 10 with the dominant market share, and this is where all the challenges come in. So it's not absolutely necessary that the larger the company or the higher the capitalization, the more the success. I mean, you can have efficient management of capital to get the same result, you know. But because the insurance penetration is relatively lower in this part of the world, and everybody's fighting for the same pie, and this is why you have this very competitive environment and challenges on the pricing, that is effectively leading to the smaller companies effectively not sustaining. Expense ratios are going up, claims ratios are not improving, post the pandemic commission rates seem to be going up again. So with all that challenge, the smaller companies are really struggling at the moment, and the solvency is well below 100% in a number of cases. So the central bank clearly is looking into how you either inject capital or you consolidate. You know, there is no third option in that context.
Understood, and I noticed as you mentioned the regulator there, and to a degree the role of the regulator in driving consolidation. You immediately had two lawyers to your right, ears prick up at a reference to law and regulation. So I'll ask my colleagues in the industry how they see the role of the regulator, and in addressing perhaps where there are barriers to entry at the moment, or barriers to consolidation.
Thank you, Peter. Yeah. Okay. So, I mean, as of this said, I think there's definitely, given the solvency situation and the other macroeconomics, there's definitely the need for consolidation. Now, what pushes the consolidation is something I think that needs to be also talked about. More and more people see consolidation as a way to, let's say, escape liquidation, insolvency and such, where the numbers are not right. Okay, let's just look at a merger and acquisition. I think the merger also needs to be looked at from a more strategic perspective, what the players can bring together. Somebody who may be very strong in, let's say, Dubai or these Emirates versus somebody who's stronger in the Northern Emirates, they can come together. They can have a bigger brand, which is more for the benefit of the customer, rather than just to save the company, just to make sure that the company keeps going. So that's a different angle to it. But I think, yeah, regulator has a very key role. They do need to come out with a framework in terms of these consolidations. They keep saying that, yes, we want more mergers to happen, but they have never set out a clear framework on how these need to happen. I mean, right now, if you ask me or any other lawyer, well, how do you go about it? It's not very clear. Who do you need to go first? Most of these are public joint stock companies. Do you need to go to the stock regulator first? Do you need to go to the insurance regulator first? So all these things need to be addressed in a proper manner so that, people who are not in the region, even foreign players, they see that, yes, regulations are transparent. Yes, we can get in. We can try and avoid the legacy issues as much as possible.
Yeah, I think I'd just add to that another issue for the regulators here that perhaps is not so prominent in other jurisdictions is the sort of lack or slight deficiency in consumer protection laws and insolvency regimes as well. I think if the regulators paid a bit more attention to those, then it will encourage more investor and consumer confidence in the industry as a whole, particularly in the region.
So then when you're talking about the solvency regime, obviously they introduced in 2014 the financial regulations that have a element of Solvency II. Are you talking there more about the enforcement of that?
Yeah, exactly, enforcement of that, and just, I guess, the fact that they haven't been tried and tested as they have been in other jurisdictions, and it naturally makes people more nervous, international players, to invest in the region than they might otherwise be.
And if you were, you have a CEO of an insurer come to you, and I'll run this by all three panelists, but you have that, or the board of directors said, well, look, we're thinking about doing an acquisition, or we're thinking about a merger. This is day one, we've got the whiteboard, we're trying to decide what to do. What kind of message would you be giving, both from a legal and from an actuarial perspective, as things to be thinking of at the outset?
Sure. Should I go first? Okay. Yeah, thanks. Yeah, you're two lawyers, so.
Middle.
Yeah. I'm not here to arbitrate between you guys. Look, the way we see M&A, it's like a marriage, really. You need to find the right spouse to eternally survive in this world, otherwise you can end up in a divorce. That's exactly what you need to look at. You need to look at a potential partner and try and see how can I improve my efficiency and my reach and my top and bottom line if I were to acquire or merge with an entity. So traditionally, we have looked at the financials and the operational component. What are the synergies between that company that you plan to acquire or merge with? How do the financials look like? How is the capital spread? What is the asset liability match? How do the reserves look like? What are the lines of business that make sense from a marketing perspective? And obviously a huge element of the acquisition is the operational synergy, because you don't want to end up with huge legacy challenges. I mean, we have seen a lot of M&A activity in the US through your reports that Clyde kindly publishes, where you find that lately many of these companies have been getting rid of the legacy books because of the whole issue around operationalization and taking care of that portfolio that is now sort of out of date in its current context. But these days, when you look at M&A, I feel that you need to put a new pair of lenses because of Insuretek. The fact that the customer is more visible, more demanding, the level of sophistication in the approach and demands that the customer has, particularly from the millennial and the post-millennial generation, you need to start looking at those components as well when it comes to M&A. From a pure actuarial perspective, it's obviously it's looking at the financials, it's looking at the operational part to some extent, the underwriting philosophies. But I think now with the M&A going forward, and we've actually seen one very interesting one developing. I don't know whether that will manifest. For the first time, I'm seeing in this region that companies are actually trying to talk to each other from the Insuretek angle. I don't see we are still there, but I wouldn't be surprised if we see that in 2023.
I think some of the other factors that have probably been brought into sharp focus due to the pandemic are things like operational resilience of the target that you're looking to acquire, some of the more sort of social aspects. So ESG is a massive buzzword. People are now considering much more, so what is the target doing in that space, and what are the risks that could arise out of acquiring this business? And connected with that and the pandemic as well, is sort of HR due diligence that you would now need to do on the business with the new way of working, even though obviously we are all getting back to the office now. It's definitely changing, and there's much greater reliance on technology, which leads me on to another point, which is I think there's much more focus as well on on the cybersecurity risk of a particular business that you are buying. Obviously, everyone will be aware that the rise in ransomware attacks during the last couple of years has been astronomical. I think it's 150% increase. So that's definitely another thing that needs to be on execs' radars.
I mean, I'll go back to the basics. As a lawyer, of course, we'll do the standard due diligence and we'll look at their licenses and the, how they're managing those licenses. Everything's done on time and all. But I think, again, the compliance aspect and the corporate governance is very important. And I mean, things will change again. Now, the corporate tax is also coming in a couple of years. So how compliant the company is and how the issues are, because a lot of the legacy issues stem out of that. If you've not been compliant, you're bound to have an issue in the future. So that, for me, is very, very important in an M&A deal, that to make sure, and of course then the warranty, and I mean, you can sort of mitigate it by bringing in the warranties, indemnity policies, and things like that. That, of course, is a separate topic altogether. But yes, that I think is important.
Can I just add one more thing? I think another key thing that execs will be looking for is innovation and product innovation, not only relating to technology, but how a business is managing to account for some of the emerging risks, such as ESG I've mentioned, or AI, algorithmic risk, to some extent still cyber risk, because it is still relatively nascent in some jurisdictions. So I think, yeah, that's another kind of factor that will be considered.
Yeah, and I think we touched on the sort of technology and basically the increased use of technology within the industry, meaning that there's got to be an understanding of the data of a business that's being acquired, what systems are being used, and how those systems can be integrated. It raises the fundamental question to my mind: is actually technology a driver for M&A, or going to be a driver for M&A, or is it actually something that potentially puts the brakes on that kind of, on mergers of businesses, simply because you can't use the legacy data?
I think when we look at technology in the context of M&A, you're talking of two components here. You are talking one of ensuring that your current operations are efficiently managed to appropriate systems. And when you talk about a merger acquisition, you want to ensure that there's synchronization to maintain that efficiency of the business. But I think the second component, which is I think even more essential, is the whole concept of Insuretek, which is taking technology to the next level, where you are now engaging with the customer in a different context. So when we just talk about health insurance, and when Dr. Haider was talking this morning, the whole concept of customer-centric management, care management, wearables, fitness, supporting the customer base with GPs online, e-health that we heard about, that is a different component, because that is the future. And if a typical traditional health company that wants to either acquire or merge, you are looking of how do you sustain your current business, how are your claims processes, are you using appropriate diagnostic codes, your procedure codes, are you getting good quality actuarial reports, analytics for management, what are the schemes to target, the burning costs, that system clearly needs to continue to evolve. But I think the fundamental change, the game changer in a potential future M&A would ideally be when you try and engage with the Insuretek companies that are investing heavily in the region, where you are changing the customer behavior, because utilization is growing, it's significantly increasing. And we already see in the system, we just heard Dr. Haider talking of 60 to 70% being referred to the hospitals or to the specialists when the GP can deal with it. They're talking of significant costs, whereas when you talk of Insuretek and the components around customer care and efficiencies, you change the behavior and mindset, you see? So there are two fundamental components that are similarly, if you translate that to general insurance and motor insurance in particular, you're talking of telematics, about liability assessment that is done within the cameras or installed gadgets in the car, you know? So that component is different to managing the claims through operational systems in the company.
It's an interesting question. Now, if we're looking at technology, the opportunity to grow a business, there may be a reason to do an acquisition because a target already has good use of technology, for example. But if I look further afield, I'm now starting to see deals in the US where the technology companies are buying the insurers. This is starting. They've hit such a scale. It's no longer a play of here, let me supply you with technology. It is, we want to be the insurer. How far do you think we are away from seeing that happen in this region?
Ooh, that's a big question in terms of how far away, but I think what I would say is that the most successful businesses are going to be the ones that tackle technology head on and the barriers to the synergies that you've just described. And any businesses that don't try and overcome that are going to lag behind. So it's essentially the sooner the better, is what I would say.
I think it's already happening. In fact, we were part of a discussion where a technology company wanted to buy a brick and mortar insurance company with one of the insurers who actually have decent share in the pie in the market. So they did come in, they wanted to buy the whole company, but the insurance company was, of course, resistant, but I think the discussions are still ongoing, and they are looking to have them as a partner now, as a joint venture. And it's a pure tech company coming from the European region with an insurance company. So yeah, it's already happening.
Can I add my views here? Yeah, so if you look at the US reports that you're talking about, you're talking of a two-tier approach here. You have the large insurers acquiring or merging with Insuretech companies. And you are talking of that reverse trend as well that we see over there. My gut feel and the way I see it in this market is I do feel that some of the leading companies right now, and I certainly know one or two in the region, who are talking to Insuretech companies to acquire or merge with them to change the value proposition. So if you look at it globally, Tokyo Marine, for example, partnered with Intact, and they came up with pay by mile. The whole idea of pay by the mile when it comes to insurance. You have Prudential that sort of acquired assurance IQ data, coming up with machine learning and artificial intelligence and changing the mindset and the way forward. But on the other hand, you have Lemonade, for example, that is now going on an IPO. So at this stage, the way I see it is, yes, Insuretech companies are still coming, they're still understanding what insurance is. You need to really understand the fundamentals of insurance before you potentially acquire an insurance company. I feel the opportunity is more on the other side, where if you are a smart, intelligent, and established large entity or an entity that is forward-looking, and you go and partner or acquire with an Insuretech entity, I see there is much more synergy to transform the industry here than the other way around, at least at this level of our maturity in the market. US obviously is a different level of maturity.
And let me just ask an aligned question to that. We've talked a little bit about Insuretek's merging with insurers. What about other parts of the value chain? We haven't really looked at technology in the intermediation space or with some of the service providers, the loss adjusters. Has anyone experienced, seeing growth in that sector as well?
Yeah, I mean, definitely in the legal sector, there's a massive push, focus on technology. Simmons, for example, we acquired a legal tech company a couple of years ago, before the pandemic, in order to work on efficiency of processes and bringing costs down. So I think it's across all parts of the chain in the insurance industry, and I think, you know, brokers and MGAs are also looking at the same issues.
I mean, closer home, the likes of, I mean, when you're talking Insuretek, so the likes of Yala Compare acquiring a broker, Bayzat acquiring a broker, all these are perfect examples of technology pushing people into this direction, clearly.
Or are they perfect examples of the regulator forcing that change? You know, so we had the electronic insurance regulations that caused the aggregators to buy brokers simply because the regulations would have put them out of business otherwise.
I think that may have accelerated it, but it would have happened in any event because, partly because consumers are demanding it. They want their insurer to be tech savvy. They, you know, yeah, I think it would have happened anyway. Just quicker.
Let me throw it over to the audience again, see if there's any questions out there on M&A consolidation. Anyone have anything they want to raise? Can we get a microphone for Ashfaq, please? Good work, George. Thank you. You talked about service to the industry earlier.
Right. My name is Mohammad Ashfaq Rahman. I'm the founder and CEO of FinMal, fintech/Insuretek venture based out of Dubai. So my question around M&A is actually, traditionally M&A, 70 to 90% fails. M&A, not acquisition part, but mostly the merger part, you know. So that's according to HBR, according to McKinsey, you know, so that's the rate. And when it comes to insurance, traditionally insurance is, I'm sorry to say, but it's an old-fashioned industry comparing with like technology and like what is happening around us. So acquiring insurance company and insurance company becoming like kind of a resistant to actually not getting acquired, actually it's going to change now. Part of the confidence actually that have been given to actually these insurers have been, I guess, the regulation. So the regulation have been a little bit of supportive of these companies actually going the way actually they've been doing their sort of business as usual, right? But you think it would continue with the like as one of the speakers just alluded to actually the point that the customer wants something different, whereas the insurance companies actually have all the traditional product suite. Actually, they want to actually carry on with the traditional distribution model or product offering model. So now with technology eating up everything, it's going to change. But on the regulation side, I don't know actually, because the future knows actually, that's what we've been discussing actually on particularly this electronic regulation. It's not just electronic regulation, it's across like overall regulations, you know, has to be standardized somehow in order to actually really thrive this industry and move forward in harmony actually, both the ends like technology or, you know, incumbent companies, you know, together. So my personal view on M&A is actually its acquisition is more successful than the merger piece, you know. And if you are resistant to actually getting acquired, then it's not going to go anywhere, you know. So what's your feedback on this particular part, whether merger is a success or in this region, or it's just like acquisition would work better than the merger piece?
Yeah, in fact, Ashfaq, we were discussing that before you entered the room, because I did observe in a slightly different context that when you talk of M&A activity, you look at it from two angles. One is a traditional angle where you look at financial and operational synergies, and you go for that. But now with the change in the customer base, you are talking of alignment of corporate vision, the customer requirements, and the need to enhance the skill sets to be able to understand the psychology of the customer out there, particularly the millennium and the post-millennium generation that think quite differently. So there is that fundamental shift in what will happen in the long term. But having said that, a lot of the regulation, a lot of the acquisition activities, particularly in this region, are pushed by the regulator. I mean, in Saudi, for example, we're talking of almost 10 companies shrinking from 30 to 20 in 2 years. 5 companies acquiring. Okay, you know, in this region, the word acquisition is also a taboo. So, you know, a politer word is merger, you know, because that is seen to be an equal partner in a marriage. But the reality, if you really dig down and look at the way the one acquires the other, is actually acquisition in that context, because you're strengthening the capital base, particularly of the one that is being squeezed out of the market. So that has traditionally worked in this market. But whether we are now moving to this new level of maturity, I feel we are. It is slow, but we are. So we can already see 2 major activities happening in the region, which might lead to some mergers in the long term. I'm not sure at this stage. So on the motor side, focus on telematics, focus on liability assessment, self-liability assessment without the need to involve assessors to physically come and see the vehicle. That's happening in the region. I can see a lot of activity going on that might lead to potential mergers with Insuretek entities. And the other area that I'm seeing right now from the data and speaking and working with certain clients is the health industry, where health insurance now is changing towards health care, you know, in a fee-for-service environment where you're selling your products. It's now changing to how do you manage the customer under a value-based healthcare system. That will fundamentally shift the mindset. And when a company understands that healthcare, rather than making money, is improving the health of an individual, that mindset shifts, we'll be able to see more of the mergers going forward.
Thank you.
If I might break with convention as a moderator, comment on that as well. I think the danger with mergers, the reasons you see that these fail, is mergers for mergers' sake are pointless. There has to be an end game. There has to be a rationale. And I confess that is one of the things that worries me in Saudi with the spate of mergers of insurers forced by the regulator, is I'm not a big believer that bigger is better. Yeah, I think it may reduce the risk of financial failure, for example. But if you have 2 underperforming insurers, smashing them together into one bigger underperforming insurer may not always be the best answer. You know, that's the kind of area where I actually would like to see the regulator take a different line and actually have some more flexibility, rather than this minimum capital you have to be of a certain scale. Actually allow for more nimble players, monoline players potentially, you know, that carry a level of capital relevant for the risks that they run. And I think that would fundamentally change the dynamic of the market myself.
Can I respond to that? Yeah. I don't disagree with what you're saying. By the way, you're a moderator today. It's good to hear your view. In Saudi Arabia, there have been certain mergers that do have some philosophical base besides just low capital, you know. So for example, when you look at the merger of Al Ahli Takaful and Arabia Shield, one of them is a protection and saving life company, the other is a general insurance company. So there is perfect synergy. Likewise, we see with the merger of Wala and MetLife AIG, which again brings the life dimension. So I think the regulator, not being defensive of Sama here, we're not a spokesman for Sama, is that yes, you are right, that there is that challenge of pushing people to enhance capital. But I think there is a little more than that in what I see, and so there is some glimmer of hope that if they get it right, then it will work. But the biggest challenge that the industry is facing, particularly in Saudi, because we're talking in that context, is the skill set. And coming back to the HR point you mentioned, you know, that is really, really critical when it comes to a merger.
And I think critical when you look at a market like Saudi, where the regulators push Saudiization to such a degree now, you know, it's actually, the war for talent is quite ridiculous, I would say, in the kingdom. Any other questions from the audience? I feel like I'm going to get both barrels from George Caban here.
No, not at all. Not at all, but actually in defense of the industry, which, you know, a moment ago I said we advocate for the industry. So there's this perception that, you know, insurers are Stone Age entities that, you know, they don't want to adopt technology. And then there's the other side who say, we're going to disrupt your industry, you know, you guys are going to be dead because they're... Look, the answer is those who will be successful are on neither end of that spectrum, right? Because I'm yet to see effective post-product sales delivery of service from the tech providers. If you want to insure your camera, your bicycle, even your motor car, to a certain extent also individual medical insurance, commoditized products, the technology channel of distribution is very effective. The margins are there or are such that that kind of technology serves that well. But when you start talking about a bit more sophisticated risk transfer needs, technology can help, but is not the disruptor that, you know. So in that sense, I think those who feel that they are going to sort of change the world and insurers of old are dinosaurs and they're going to be gone. I think they might need to sort of tone down their expectations a little bit in that respect. Talking about the mergers and acquisitions side and insurers acquiring tech companies or the reverse, I think there's a significant element, and I'd like to hear someone challenge the proposition that it's actually the regulatory factors that are either forcing people to have to buy an insurer to get the license because there's a moratorium on allowing new insurance companies, or even the acquisition of brokers. I'd like to hear the speaker's view on that, that it's, at least in the UAE, it's primarily driven by a regulatory obstacle.
I mean, I can answer that one if people want me to. I agree. I think there is a level of activity in this marketplace that is driven because of regulatory hurdles. We talked about, a Yalla Compare, for example. We've seen it with the aggregators having to buy brokers because there is no other way for them to stay in business. We've seen acquisitions as a way of entering the market, simply because there can't be a new license. Cigna, for example, doing the acquisition of Zurich's direct business was a perfect example of that. And even where there are licenses available, I've seen acquisitions used simply because it can be faster than going through the regulatory regime in the first place. I don't think that's the be-all and end-all, though. I think we've heard about other acquisitions in the market that are there are strategic. They're not driven by regulation. AXA, for example, selling to GIG. I think from the GIG side, that was very much a strategic play about bulking out their operations regionally. And I genuinely think that's a big trend that we're going to see over the next 5 years, is regional conglomerates, both on the intermediation side and on the insurer side, starting to grow scale across multiple jurisdictions. And I think those kind of strategic sales are going to keep coming. And I'm certainly aware of at least one transaction I'm looking at again that is the same kind of rationale, another regional group looking to expand, so not purely driven by regulation. I think sadly, some of it, we've touched on it before, is regulation can certainly here in the UAE be a real impediment. Trying to explain to a US company why, for example, they can't own 100% of an insurance vehicle here is a challenge. Trying to explain a situation whereby you technically can own more than 50% of a listed company, but the moment you make that offer, you then triggered a takeover offer that requires you to bid for 100%, but you can never have. Those kind of things need to be tidied up, and Anand alluded to that the regulator probably has worked there if it wants to see more activity in this space could certainly, I think, ease that process. Any more for any more? No, that's a hungry-looking group of people. I think it's probably time for lunch. So let me take the opportunity to say thank you to the audience for bearing with us. Thank you to my panelists for taking part, and thank you to the organisers for a wonderful event.
Thank you.
Thank you so much. It was a spectacular session indeed. With this, we have come to the end of day 2 of our conference. I request Mr. George Kaban, Dr. Abdul Zahra, and Dr. Sohan Roy to kindly join me on stage to present the mementos to our esteemed sponsors. Thank you. So yes, now to present the mementos to our sponsors, without whom we would not have been here today. So thank you so much for the support. Let's start with the gold sponsors. Do we have Motori? Motori? All right. Ablera? A round of applause, please. They are our gold sponsor. A round of applause, please, ladies and gentlemen. Ablera. Thank you so much for your support, sir. Next, I would like to call upon Apex Auto Garage. A round of applause, please, ladies and gentlemen. They are our gold sponsor as well. Thank you so much for your support, sir. Next, our silver sponsors. EY. A round of applause, please, ladies and gentlemen. EY team is our silver sponsor. A round of applause, please, ladies and gentlemen, for EY. Thank you so much for your support, sir. Next, I would like to invite Solera Autotex. Do we have Solera? Yes. There are silver sponsors. A round of applause, please, for Solera Auditex, a silver sponsor. Thank you so much for your support, sir. Next, our delegate bag sponsor, eBauTech Insure MO. They are our delegate bag sponsor. A round of applause, please, ladies and gentlemen, for eBauTech Insure MO. Thank you so much, ma'am, for your support. Next, our badge and lanyard sponsor, Now Health International. Do we have Now Health with us? Moving on. Our registration area sponsor, I would like to invite Decadu. Our next sponsor, Bronze, I would like to invite Al Watba National Insurance Company. A round of applause, please, ladies and gentlemen. Next, I would like to invite GRS Complex Claim Solutions, our bronze sponsor as well. A round of applause, please, ladies and gentlemen, for our bronze sponsor. Thank you so much for your support, ma'am. Our technology partner, I would like to invite Azentio Software. A round of applause, please, ladies and gentlemen. They are our technology partner. Thank you so much for your support, sir. Our conference session sponsors. I would like to invite Albufeira National Insurance Company. A round of applause, ladies and gentlemen. They're one of our conference session sponsors. A round of applause, please, ladies and gentlemen. Thank you so much for your support, sir. Next, I would like to invite Insuretek. Moving on, our consulting partner, AJMS Global. May we please have them on stage, please. A round of applause, please, ladies and gentlemen. They are our consulting partner, AJMS Global. Thank you for your support, sir. I believe we have one of our gold sponsors with us. May we have Motri on stage, please. A round of of applause, please, ladies and gentlemen. They're one of our gold sponsors. Thank you so much for your support, sir. Thank you so much, Mr. George Kaban, and thank you, Dr. Abdul Zahra. I request you both to kindly be seated, and Dr. Roy, I request you to stay back. Sir, please. Thank you so much. And now it's time to present our token of appreciation to our esteemed moderator and speakers. First, I would like to invite Mr. Aftab Hassan, Chairman, Risk Exchange DIFC, to kindly receive our certificate of appreciation. A round of applause, please. Thank you so much, sir. Next, I would like to invite Mr. Vasilis Katsipis, General Manager, Market Development, to kindly accept our token of appreciation. Is Mr. Vasilis present? Moving on, next I invite Mr. Vivek Mundra, Partner, AJMS Global, to accept his certificate of appreciation. Do we have Mr. Vivek here? Next, I would like to invite Dr. Abdul Zahra A. Ali, Chairman, Insurance Business Group, to kindly accept our token of appreciation. A round of applause, please, ladies and gentlemen. Thank you, sir. Now I request Mr. Peter Hodgins, Partner, Clyde & Co., to kindly accept our token of appreciation. Is Mr. Peter here? Moving on. Next, I invite Mr. Safdar Jaffer, Managing Director, Milliman, to kindly accept our certificate of appreciation. Next, I would like to invite Miss Olivia Darlington, Head of Insurance, Middle East and Africa, Simmons & Simmons Middle East LLP, to kindly receive the token of appreciation. Is she here? Okay. And finally, I request Mr. Anand Singh, Senior Counsel, Al Tamimi & Company, to kindly accept our token of appreciation. All right. Thank you so much, Dr. Sohan Roy. It's been a pleasure. As we draw curtains on Insuretek International Conference and Golden Shield Excellence Award 2022, I would like to start by thanking our esteemed sponsors, without whom we would not have been here today. So thank you so much once again from the bottom of our heart. Next, I would like to thank our esteemed moderators, panelists, and speakers for their thought-provoking talks, and our lovely audience for being with us here today. And I hope you enjoyed the event and the award gala yesterday as well. So I hope the event was able to reach up to your optimistic expectations, and we would love to hear from you all about it. With a hope to see you all next year for our next edition Insuretek 2023 Conference and Awards, which is to be held on 9th March 2023. Yes, we hope to see you soon. And thank you so much. Thank you so much for being a wonderful audience. Lunch is served at the foyer, and hope you enjoy. Have a safe drive back home. Thank you so much.